Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. One of the biggest reasons why silver has so much potential is because the shortage, right? The US Mint sold out of American Eagles. Royal Canadian Mint shut down for 2 weeks. There's a global silver shortage. Mexico, Peru, Chile, Australia, China, the biggest silver producers around the globe have been shutting down production due to COVID-19. So this article was made 2 days ago titled "Silver is unavailabilium, soon to be unaffordabilium," talking about how silver is unavailable. There's no silver. So anyways, the biggest play right now is probably silver. Silver is the biggest play out of every investment, S&P 500, stock markets, cryptocurrency. It's silver. Silver, ladies and gentlemen. The ratios between various commodities are absolutely important. For instance, there's a certain amount of substitutability between copper and aluminum for electrical conductors. So the price ratio between the two of them is important in deciding which to choose. There's a ratio between the price of hogs and the price of cattle. People will buy one or another depending on the price ratio between them. This is true of all commodities. Prices are relative and always changing. Take another example. The price ratio of palladium and the platinum is very important. Both are used as automotive catalysts. It determines when you use one or another because there's a lot of substitutability between those things as well. As far as silver is concerned, let me be clear on this. There is no magic fixed ratio between them. The US government arbitrarily fixed the ratio between gold and silver on 17-1 for almost 200 years. This bimetallic standard was foolish but possible in technology simple times. It's a mistake because the market, not politicians, should determine the ratios. So what should the approximate ratio between gold and silver be? Some rough numbers. There are probably around 6 billion ounces of gold that have been mined since the dawn of history. Most of that is still above ground and available, and that's because gold is recycled, right? It's reused, right? A lot of gold is recycled, remelted, reused, rescrapped. Silver, on the other hand, is lost in technology. It's not like copper or aluminum or iron, where it's consumed. Gold is held because its primary use is money, right? A lot of gold is used for jewelry, used for coinage, used for bars, so it's recycled. How much silver has been mined? In Earth's crust, there's probably around 10 to 15 times more silver than there is gold. And that's reflected in annual production figures. Roughly 80 million ounces of gold, 800 million ounces of silver. So you would think the ratio would be around, right, 10 to 15 to 1 because that's how much it comes out of the ground. But if there are 6 billion ounces above ground in inventory, there is nowhere near 10 times that amount of silver in inventory above ground. At this point, we are probably only around 2 billion ounces of silver in inventory because it's used almost on par with gold as money, but that's changed. Now it's mainly specialized in industrial metals, so when it's consumed in much the same way as copper or aluminum. Incidentally, the amount of silver in inventory is now less than it has ever been. Less than it's ever been, because not so very long ago, up to 1965, there used to be 2 billion ounces of floating around in US coins alone. It's also gone from photography, which consumed up about half of it, about 2000. Its price held up surprisingly well, considering its two major uses have disappeared and production keeps going. Anyway, coming back to the point on ratios, what should the ratio between gold and silver be? Right now, it's close to 100 to 1. So gold is expensive in terms of silver. Silver is cheap now. It's an excellent speculation. There are more technological uses developed for silver every day than for gold because it's cheap, right? There's 5G technology, EVs, electric vehicles. There's so many different things. There's colloidal silver. Scientists found a way to make silver 40% stronger without losing any electrical conductivity. So there's a lot of uses. The interesting thing is that silver is a much, much smaller market than gold. And when the public gets manic in a monetary crisis, silver is much more volatile since it's a smaller market. People rush to buy gold and silver, which they think is one thing. That's a good reason to be in silver right now. When the markets are weak, it's cheap. Another point that should be made is that it's almost all gold mines are now very profitable. In fact, production costs are dropping with the price of oil, which is a major cost. But there are very few profitable standalone silver mines. It's mostly a byproduct of gold, copper, lead, and zinc. So silver's found by accident, basically. So if gold goes at $5,000 an ounce, which it will at some point in terms of present dollars, there will be a lot more gold production. But if silver goes to $100 an ounce, which I think it will, there won't be an awful lot of new silver production because it's mainly dependent upon lead, zinc, and copper and gold production. So I think the play right now is probably in silver. That said, it takes so much silver to be of value that I do my savings in gold, not silver. To put in as simple way as possible, gold is for saving, silver is for speculation, which I don't agree with. I mean, gold is a great way if you're investing heavily to hold a large amount of wealth. You can hold $100,000 of gold in a shoebox. You can't do that with silver. So, so for storage, diversity is definitely key, but I still think you should focus on silver. A lot of reasons to be bullish on silver. There's been a lot of focus on gold with the crashing stock market and the economic chaos set off by the coronavirus economic lockdown, but what about silver? There were reasons to be bullish on silver even before the bottom fell out of the stock market. In its 2020 market forecast, the Silver Institute projected that silver would shine with higher prices supported by expanded physical silver investment and industrial demand. The market dynamics have certainly changed since the Institute released that report, but there are still reasons to be bullish on the white metal. The price of silver took a tumble in the early days of the stock market sell-off. It took an even bigger hit than gold. The prospect of a global economic slowdown put a damper on optimism about increasing industrial demand. But at its core, silver is a monetary metal, and while it is more volatile, it is historically tracked with gold over the long term. Looking at the performance of gold and silver during the 2008 financial crisis is informative, right? The financial credit crisis, that led to $50 silver, and that's probably what's going to be happening. The same things are happening right now. So when gold and silver both fell steeply as the stock market crashed last month, a lot of people asked what happened to precious metal safe haven bid. But the same thing happened in 2008. In the early days of the big sell-off, many investors liquidate their precious metals to cash to cover margin. And it wasn't until later in the 2008 final crashes when the QE rate cuts really started to bite that gold and silver pushed right away. That pushed gold and silver up right away. Looking at the numbers, gold fell 29% between March 2008 and November 2008. Then it started to recover as all the QE and quantitative easing and monetary stimulus kicked in. Silver's crash during the time was even worse. It lost 57% in 7 months because silver is more volatile. It hits higher highs and lower lows. Over the next 3 years between 2008 and 2011, gold gained 166% and silver skyrocketed 448%. We're seeing the same setup, similar in the dynamic today. Although the metals are holding their ground much better its time than they did in 2008, so we could see even higher numbers. Looking at those numbers reveals another historical trend. Silver tends to outperform gold in a bull market, or in a gold bull market. Silver is extremely undervalued compared to gold. Last summer, we talked about how out of whack the gold to silver ratio was. We called it a silver sale. At the time, the ratio put back to 93 to 1. In other words, it took 93 ounces of silver to buy 1 ounce of gold. Today, the gold to silver ratio is 111 to 1. So, here's some historical perspective. Geologists estimate there's approximately 19 ounces of silver for every ounce of gold in the Earth's crust. With a ratio of approximately 11.2 ounces of silver to each ounce of gold has ever been mined, interestingly enough, the gold to silver ratio in ancient Egypt was 1 to 1, right? Was 1 to 1. Ancient Egyptians saw silver as magical. They saw it as magical because it could purify water, the way it responded with other elements. It was like no other metal, and silver is like no other metal. It's the most highly conductive metal for thermal conductivity and electricity. No other metal performs like silver, especially for as cheap as it is. So, with silver playing a smaller role as a monetary metal, the silver-gold ratio gradually spread. The modern average has been around 40 and 50 to 1. As commodities analyst Jason Hamlin said in an article published by Seeking Alpha, the gold to silver ratio has been one of the most reliable technical buy indicators for silver whenever the ratio climbs above 80. Today, the silver to gold ratio is much further from this historical norm. In essence, the white metal is at a bargain basement price. Supply and demand dynamics also look bullish for silver. In fact, many analysts believe we're heading toward a significant silver shortage as mining slows down along with global economy. So, there's definitely a huge, huge opportunity here, ladies and gentlemen. A huge opportunity here. It just depends if you're going to take advantage of it or not. And do you have silver in your portfolio? And do you believe the signs, the indicators leading towards higher prices? Are you going to be taking note of that, or are you going to sit on the sidelines and then kick yourself in the butt afterwards after it already skyrockets? It's up to you, right? It's up to you. You don't want to be looking back during this time period and say, wow, silver was a ticking time bomb. I missed my chance. I knew about it. See, there's a difference between people that know about it and don't know about it. If you don't know about it, you don't even have an opportunity. You don't even have a stand a chance. But if you're aware of precious metals, if you know about silver and what it really can do, then you have at least a chance to preserve your wealth, to protect your wealth, and live financially free. So anyways, I'm going to wrap this video up here. The link to this article from Commodity Trade Mantra will be in the description if you want to check it out yourself. Thank you so much for tuning in. Make sure to smash that like button. Make sure you subscribe because I post daily videos. This was Silver Slayer. Thank you so much for tuning in. I'll see you guys soon. Peace.